One of the factors that boosted India's growth in Q1 2023 was the moderation in product prices. According to the NSO, the Consumer Price Index, CPI, inflation slowed to 6.9% from January to March, from 7.9% in the previous quarter. This was mainly due to lower food and fuel inflation, which eased the cost of living for consumers. CPI excluding food, beverages, tobacco and fuel/light was also projected to soften in that period. The decline in product prices helped consumption in rural India increase 0.3% after 6 quarters of decline. Rural demand was supported by a good monsoon, higher crop output, and government schemes such as PM Kisan and MNREGA. Rural consumption accounts for about 45% of India's GDP and is a key driver of growth. The increase in rural demand also benefited sectors such as consumer durables, automobiles, and fast-moving consumer goods, FMCG, which saw a recovery in sales and production in Q1. The easing of lockdown restrictions and the vaccination drive also boosted consumer confidence and spending. Thus, the slowdown in product prices and the revival of rural demand were among the factors that contributed to India's growth of 13.5% in Q1 2023, which was the highest among the major economies in the world. One of the factors that boosted India's growth in Q1 2023 was the recovery of rural demand for consumer goods. According to Nielsen IQ, rural consumption of consumer goods increased by 0.3% in Q1 2023, after 6 quarters of decline. This was helped by the easing of inflation and price hikes, which slowed down to 6.9% from January to March, from 7.9% in the previous quarter. Several Indian consumer goods makers, such as Marico, Adani Wilmar, and Hindustan Unilever, have cut prices as commodity costs come off their highs. These companies are also chasing volume growth by offering higher grammage and discounts to consumers. For example, Hindustan Unilever reduced the pack size of its Surf Excel detergent by 10% and increased the price by 5%, effectively hiking the price per gram by 17%. Similarly, Nestlé reduced the pack size of its Maggi noodles by 12% and increased the price by 6%, resulting in a 20% increase in price per gram. By cutting prices and offering more value to consumers, these companies are hoping to stimulate demand and improve their margins in FY. They are also investing more in advertising and marketing to reach out to their target segments. As a result, they have reported volume recovery and margin improvement in Q1. For instance, Marico reported an 18.7% increase in its net profit and a 3.65% increase in its sales in Q1 2023, driven by single-digit volume growth and moderation in commodity prices. Thus, we can see how several Indian consumer goods makers have cut prices as commodity costs come off their highs, and how this has contributed to the growth of private consumption and rural demand in India in Q1 2023.